Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the market hitting new 2022 lows, the 22-year low in mortgage refinancing, and why you should open a Roth IRA for your kids. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The stock market hit a new low for the year yesterday. What does this mean for the remaining 3 months of the year?
Well, good morning, Allison, and good morning, everybody. Again, tough times. The market, struggling to go higher yesterday, could not, rolled over pretty good and eventually led to, several days of selling now, I think 6 or 7. But when you go to the actual, new low for the year, so we'll pull up the chart here in a second, for the S&P 500, even though the futures are in the green. I'll talk to that here in a second. But the question is, what does this mean for the rest of the year, right? So we started off here, kind of had the dip. We've bounced a few times, significant bounce from mid-June to mid-August, and now we've given all of that back. Largely, that was Powell's more pain ahead comment, and then the fact that we had to continue the 75 basis point rate hikes. And we're a little bit of an unknown as far as what's going to happen next. So that's why the market's selling. I would say if you really look at, what does this mean for the future? Well, when you make new lows, from a technical perspective, the chart becomes broken, if you will, is kind of the industry term. That means there's no real resistance. I mean, if you'd have to go out to the 5-year chart, right? And say, well, where's your resistance point where the market keeps bouncing? Here? No. I mean, we're not going to go down that far, I don't think. I mean, I guess possibly could, but not really, right? So we're in this kind of free fall area where there's no real chart-based thing for us to say, okay, well, the next bounce level is here. Now there's a million technical indicators out there. You could go Fibonacci, numbers and, talk about that, but we're just kind of an huge unknown right now. And that markets don't like uncertainty. So that's where we are. It's a little worse in the NASDAQ when you take a look at the situation there. It's fallen further for the year, but also breaking those, close to breaking those new lows there again, down 23%, or excuse me, 30% for the year. So is there blood in the streets? Not yet. Could there be blood in the streets if this continues? Then yeah, I think we will actually see blood in the streets. So why? Well, if you could recap 2022, inflation's the problem. The Fed was the cure, raising interest rates. We've gone through, 9 months of the cure and no real break in the original problem, right? So we would need, the catalyst for things to turn around is inflation actually starts. Inflation prints that come out, I believe, monthly of all different types, but each inflation number needs to be trending better. That would put a bottom in the market because that would in turn mean that the Fed rate hikes would be less, which I don't think they'll stop raising rates, but they'll certainly lighten at some point. So what are economists saying? Well, everybody's kind of kicking out their recovery. They've gone from soft landing to hard landing, and I think that's the case now too, meaning that the Fed's going to continue to raise rates to make sure that we kill off inflation. And they're going to continue to do that despite what it does to the economy. Well, the problem then becomes, like Blackstone was saying the other day, is like, well, what if you do all that and it doesn't cure inflation? Then you've got both, right? And that could put us in a really bad situation, and which was largely self-induced, which is kind of the tough part of it. Catalyst for going higher. I thought the election would be a catalyst. Now I have to put that off into the hope category. I hope it's a catalyst. I can't tell you it's a catalyst like I thought for sure it was earlier in the year. Ukraine, Russia conflict wrapping up. I don't think that's moving the needle here in the stock market. I think everybody's watching the Federal Reserve, and everybody's in the don't fight the Fed mode. So it's not that everybody's selling. It's the fact that there aren't a lot of people coming in to buy yet. And there's a kind of a wait and see attitude. In some accounts I have gone, I've reduced risks. Certainly if you've contacted me, For the portfolios I manage for you, we've taken some risk off either by going to a smaller risk number as far as the risk aligned portfolios, or even starting building some cash positions. If you have cash in your account, it's going to sit there for a bit while we kind of figure out where we're going. So that's where we are with the market. I don't have a super optimistic view of the remaining 3 months of the year. I'll officially have my investment advisory board here next week on next Thursday night, where I give up my official projections. But that's all I have for now.
Next, mortgage refinancing has basically evaporated. What does this mean for the economy?
Well, if you've been, if you're not in the mortgage refinance or house buying or selling, this could largely go. If you're not in that game right now, this could go unnoticed. But if you look at this top line down here, the increase to 6.52% for the 30-year fixed. Okay, that's kind of insane. And what I really wanted to show you is this chart. So you scroll down, this is the 30-year fixed, right? So you go back a year and it's sitting at 3%. So it's more than doubled. So you've probably seen the math on, mainstream media or even TikToks running the, how much is your house payment now if you had to refinance? And you can't unless you have to, if you will. So why does that change everything? And why is this obviously dire for the housing market too? Is houses go up over time. For the most part, they're not going to go up right now anytime soon, because they already kind of been in a bubble. But you have a house prices shoot up, interest rates go down, you refinance and take that cash out of the house, refinance to a nice low rate, and then you put that cash to work. That has been the genius move. There are folks out there that are just anxious to pay off their house, and if that's your goal, that's your goal. But that has been kind of the move. Well, now that's not the move anymore. Now, if you're sitting at 3%, and even if you want to get your $200,000 or $300,000, if you have a nice big house, out of your home and use it for something else, now you're locked in. You're going to more than double your interest rate. So you would not do that. So it's slowing down money for other things, if you will. So another headwind that's out there for the economy. If, however, you do have a mortgage right now, what you should not do is, and this is an opinion, I don't know your specific situation, don't pay that off early. Don't be making extra payments. So, if you're getting money at 2.5%, 3%, that's the best you're going to see. I mean, you'd literally, if you think from an arbitrage perspective, you could get a 4% CD, and it more than covers the 2.5% you're paying in your house, right? So if you have a nice low rate, just don't be in any hurry to either sell that house or pay that off early, just because you have that. But I think this is going to continue. You hear a 22-year low. Yeah, it's going to, basically the mortgage refinancing is evaporating. And of course, there's a lot of jobs that go with that, that will be evaporating as well, because there's just not the volume out there.
Last, why should people consider opening a Roth IRA for the children?
Yeah, so if you are below 18 and you work, you have to have an official job. So I mean, you don't speed here, because then you're breaking the law. But if your child has 1099 or W-2 income, that's easy to prove, right? Because they'll have a form that goes with it. Consider, if you have the cash flow, to open up a Roth IRA for them. So here's why I bring that up. My parents did this for me way back in the day. You've probably heard this story if you're a regular listener, but I was 16 and they said, "Hey, you need to go get a job." And I said, "Well, my job's been to get good grades, and look at my grades. They're pretty epic. Why am I going to get a job?" And I said, "Well, there's this IRA thing. You make the money, you keep the money you make, and we'll just match it into your IRA." And I'm like, "Sounds like free money." And they're like, "Yeah, that's fine. It's free money." I'm like, "Yep. Okay, cool. I'll take free money." So, that's what we did for Allison when she was a minor. That is, you go to work and you keep the money, and then you put this away for your kids. There's two things that are happening here. Is A, you're putting money to work that they're not going to touch for 5 decades. Right. So, I mean, the money's going to grow. Even the world's worst investor is making money over 5 decades. Right. But if you get aggressive and you're a good investor, you could be looking at significant gains 50 years from now. So that's one, is just the sheer math behind the, time value of money, all of that stuff, that. So get it to work early. Every adult out there, pretty much says if I could do one thing is I would have started earlier, right, with investing. Well, I started at 16, and yeah, I would have started at 10 had I had a job, right? So I mean, it's really the earlier you get started, the better off you are going to be financially. So that's one. Second is the discipline and the education that comes from it. I'm fully honest that I did when at 16, when I had an IRA, I didn't really look at it. It wasn't really, I was kind of into this stuff, but I still wasn't really like into it, right? Because there's a lot of other things going on when you're 16. So by the time I graduated college, though, now this money had been in there, 5, 6 years, and it's just like, holy cow, look at, hey, look at this. It's like now I can see it. And I can't know for sure. Nobody knows what kind of puts things into your head, but certainly that I turned into a lifelong investor, and that may or may not have been the cause of that. It certainly didn't hurt, right? So it gets kids, younger folks talking about investing, talking about an IRA. They at least know what it is, so they don't turn 30 or 35 and have to ask you like, what's an IRA again, right? So you're planting the seeds for you taking care of their future right now, but then of course, leave the nest off into being a productive member of society. They also have the discipline and the exposure to investing that's going to benefit them for the rest of their life. So if you have any questions on this, it's easy to do, but it's not simple necessarily. So if you have any questions, reach out and I can coach you through it.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.